And welcome to another episode of Daily Market Mastery with me, Christian Rauchenwald, on this Friday. I hope you all had a great trading week and a great week in general. As always, before we jump into the markets, let's get the usual disclaimer out of the way first. Everything that I share in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Besides that, all the tools that I'm using, so the broker, the charting software, the strategy I'm following, and so on, are all linked in the video description down below. And the one thing, if you're here for the first time or you haven't done so in the past in general, is you should definitely check out the Elliott Wave principle, that or which you can read online for free when you're using the link in the description down below, or you can use the same link to get yourself a physical copy. Now, with that out of the way, we can jump into my portfolio, and we see that surprisingly we have another break-even start into the day. Almost plus minus zero. There is some notification probably about data release. Okay, but there we go. And yeah, today we have some options expiring. I talked about them yesterday a little bit more. So if you're curious about my SPY put, beer put options and the Intel put options, check out yesterday's episode. Initially they looked like they're going my way, and they were going my way, just to then decide to say nope, because I got the analysis only partially right and didn't bother to take profits along the way. So there's that. But let's jump into it. I still have to fire up Motive Wave, so 1 second for the software to load, or actually a little bit more than a second. There we go, Motive Wave. We're gonna start with GameStop. GameStop still moving sideways, and we're still waiting for strong movement, either up or down, to confirm one of two possible labelings. However, the long-term outlook, in my opinion, is still bullish, still upwards. The question is just, will short-term, are we going to first short-term see another push down? Worst case into the area here of the 78.6 retracement and the 100% expansion level of a potential corrective pattern that could look like this. Corrective patterns are usually the annoying part of Elliott Wave Theory, or the more complex part of Elliott Wave Theory, or the Elliott Wave principle. Therefore, that's the part where I personally make most of the mistakes. And therefore, there is no 100% certainty right now, other than the long-term outlook, where I'm relatively certain that we're still going up further. But short-term, as said, it could also first go down. Now, overall, we can see on the right, most of the things on my watch list are green today, which is a little bit considering that, for example, in Intel, as said, we have put options, and we would need Intel to actually go down to 21 or below 2150 today, which would still be possible assuming that this is A, B, and C unfinished. And in wave C, we would have something like 1, 2, or 1, 2, 3, 4, and then wave 5. Yeah, so there would that option is still alive. Although if today we open and we break the 2282 to the top, then that option would be dead, which means at market open, or even right now, one could make a short gamble, because either we still get a wave 5, and in which case we would go down, or we don't, in which case the stop loss could be set at 2282, which means the risk would not be very high. We can see we're talking about like, what's that, 1% risk or so, in relation to that, a multitude of that in potential reward. We could actually we could check. I mean, our risk in Intel is not that big. We'll have to wait another minute to actually get rates for options, so updated rates. But we might get a 0 DTE put option. So to basically say, to increase our bet a little bit for today, we're going down. It would need to be a 2250 put. We're gonna wait for those 30 seconds to pass to get prices, but basically what we would want to is consider getting that, which may or may not be cheap today. So we see last price or last quote that's listed is $29, which means we would have a break even at 22.20 or whatever. So but that would be a play we can make depending on the rate that we get here. So we can see that it's $20. Yeah, we can actually, do I want to do that? So there we don't see the profile, yeah. Can I, let's use the strategy builder. I know time is money. Oh, the option actually gets, wait, where's Intel? 2267, and our, in quotes, theoretical stop loss would be at 2282. So $15 we can say we're just going to get through without looking at the profile. So we can now look at the profile. So basically 2 and then profile. Actually, it's still considering 1, yeah. So we would need to go to, does it mention break even? 22.35 to be break even, and if we go lower, then it actually makes profit. Obviously, will not make a fortune in profit, as we can see. So we got those, yeah. So we got the 22.50 puts here. I'm gonna add them to the position that I have in put, and here in option strat, sorry. So that was the 21.50 that we have, and now we have the 22.50 puts. We also got 2 pieces, and we paid 0.153. I'm going to save that trade. Override existing trade, yes. So our Intel trade for today basically looks like this. We can see that overall, so that's considering the other 2 put options that we have, that throughout the day, if we fall a little bit, so 22.27 would be already break even or a small profit, whereas if we wait till expiration, we'll have to be at 22.22 to make or realize a very, very small overall profit, considering the premium that we paid for the 21.50 puts and the premium that we paid now for the 22.50 puts. Yeah, that trade can go south really, really quick. So it's possible that really soon we get a push up and are proven wrong here, but the money that we risk is relatively little. And by adding an additional, or by adding 2 additional put options, we actually increase the chance that we still, increase the chance. If we move down, we don't need to move down as far to still end up in profit. However, we definitely want to close those options before the market closes, because otherwise, if they're in the money, they might exercise, and then suddenly we have the shares and the weekend risk. So, no, actually, we bought the put, which means somebody else would buy the shares from us, so we don't get the shares assigned. Never mind that, yeah. So, yeah, so we bought the put. If I sell a put option, I get the premium, but if it's going in the money, then I have to buy the shares, so from whoever, yeah. So basically, we don't have risk of assignment here. Yeah, that's fine. So with that, we have Intel covered. And as I said, we will see either this is 1, 2, 3, 4, 5 for the final push down, which should go at least to 21.45. Doesn't have to happen today, which would be bad for us since our option is expiring today. But that's what it is, right? Or that's what the pattern, the potential pattern looks right now. Or this turns into some ABC stuff and we get the next push up, and then that trade just is worthless, which, yeah, nobody can be right 100% of the time. We will see either way. Now, other than Intel and GameStop, let's take a look at Barnes & Noble Education, where we broke one of the important levels, what we assume wave point 4 here, as an additional confirmation that we potentially might really be going this way right now. We, however, are still waiting for a break of the deceleration trend line, which, it's still possible that we're going down. Yeah, of course, one can always be wrong. But yeah, once we break the deceleration trend line and don't break through it to the bottom again, we have somewhat of an extra confirmation that indeed that is the entire correction. And from here, we are on our merry journey further up. Our exposure is not that big. We hold 30 shares in Barnes & Noble Educational right now. So we're talking about a $300 investment. So yeah, we'll see how it goes. But so far, it looks like things are playing out nicely. And moving on. What are we looking at next? But immersion, yeah, still unchanged. So still basically, we could add a trend line here. It's not a super relevant one, but basically what we're waiting for is a break to the top of this trend line or a push to the bottom to finish something that might be 1, 2, 3, 4, 5. Yeah? Either way, while I was partially wrong with assuming the correction is over here in this area, I think we are already close to the end of this corrective pattern and should after that also start to see our upwards movement continue, or yeah, like this upwards movement slowly continue. Intel, we covered this set, so we're waiting. COS, no is below 20 cents, so I really this weekend have to figure out why we're not getting a chart. So we were waiting for that to break the 20-cent mark. Yeah, I said we don't get a chart. I will look into that. I pinky swear. Yeah, I probably will forget, but I'll try to look into that. Just so many other things to do. Anyway, like I think from what I recall, the last time we were able to see a chart, we were actually waiting for it to break the 20 to finish part of the fifth wave. So we would need to label further, but I think our original expectation was that we might get even lower, even to the 5-cent area, which would be a suitable entry then. But we either way will have to get the chart working so we can label it properly and maybe find a nice entry. COS, we are going higher, but we are however waiting for a break of the 879 here to have an additional confirmation that we are looking at something like correction over 1, 2, 3, 4, 5 in progress. Yeah. And yeah, so that's what we're doing here. NEO, yeah, not much change, still on the downward track. We might get a little bit of recovery, but there should still be more downward movement. Novavax, it's going to be an interesting question to see if this will now mark the 0.4 that we actually thought is here, or if we'll get further movement down. One has to consider that if that is, yeah, I mean, it's possible that this is some kind of like 1, 2, 3, 4, and we still get another push a little bit further down. It's also possible that this is just a free wave move. So yeah, like waiting and seeing, especially on a daily chart, will be the best play here. We still have a little bit of time until our options would be worthless. So, but I still believe that we are yet to see, or that we have yet to see a fifth wave upwards. However, I have to admit, it was a little bit stupid of me to not set a trailing stop loss, or at least any kind of take profit or stop loss for the call options that I bought for here, to already take profits either here or here or here or here. Yeah, although or at least secure profits to get out plus minus zero if we start to experience further corrections. Yeah, but it is what it is, and we're gonna see this through till the end. But yeah, so chances are that here we have our end of the correction now. But I would still wait a little bit if I wouldn't already have positions in Novavax. Long term, I think there has to be a fifth wave push. Question is short term, will we, for example, first get to see the 61.8 retracement or not, which would mean basically a 20% drop or not. And then moving on, yeah, covered yesterday, and yeah, like not worth getting into because of risk reward ratio, SMCI. NVIDIA, apparently only a short correction here, which reached the 38.2 retracement level. The 38.2 retracement level is so often a very, very good entry point. I mean, until it's not, so the challenge is always with finding the right stop loss and with then knowing when to get out. But it's reasonably often one of the levels. So 61.8, 38.2, usually the two levels where corrective movements or corrective waves have their turnaround. Yeah, so considering all of this, 1, 2, 3, 1, 2, 3, 4, 5. So there might be a little bit more upside here for this fifth wave, and then we should get the next small corrective move. Yeah, overall there should still be, or the way it looks right now, especially if or when we break the 141.60 that we haven't broken yet. So if or when we break the 141.60, we can be relatively certain that we are yet, or that we are still have to see another push upwards to make this 1, 2, 3, 4, 5. Yeah, like we see the orange labeling here. Yeah, and probably similar to that. Yeah, similar in quotes. We see the Nasdaq. We see, however, here we have the option that this is only the beginning, so an unfinished correction A, B, C. So there's still room down here in the Nasdaq. Depends a lot on what we are correcting. So if this is 1, 2, 3, 4, 5, and then wave, which automatically then becomes wave 1, wave 2, and we're currently in wave 3. But it looks like even here we have a 1, 2, 3, 4, 5 finished, which means we're likely at least correcting this right now. And if we're correcting this, we can see that we could still go down here to the 19,956 mark for an ABC at the 61.8 retracement area. And then from there, we would go further up. So today, I wouldn't be surprised if the Nasdaq finishes in red to basically, as I said, take us down. Maybe not today, but then on Monday, take us down to here. Although the distance here, double checking. There is actually data missing, okay. Or it looks like there's data missing, yeah, so. October 17th, so we're a day behind here, so yeah, okay, so scratch that regarding the Nasdaq. I will not waste the time to try to figure out what's going on wrong here, but clearly we're not getting the data feed for the Nasdaq right now here. So yeah, then maybe we are already a little lower. I'm not gonna check. Like I don't have any positions, but maybe we're already in this pattern, already on our way to the 20,000 mark. Maybe, however, we gapped up today, which means the correction would be finished here, and that might be 1, 2, 3, 4, 5 for the next upward move. So yeah, like no data available. So what can we do? And that brings us to SPY. And in SPY, we also. There we have up-to-date data. We can see 1, 2, 3, 4, 4 maybe finished. Yeah. So if we make this one here further back and then get another Fibonacci retracement here. So if this is our third wave here, we can see our wave 4 retraced 50%. Visually, that looks like ABC. So there is upside potential here. Stop loss would need to be at this low point, so at 580, at 582.18, and take profit could be at where do we expect this to go? We expect this to go to 586.66. Yeah, and I'm gonna check option strat for a second. So for SPY, if we say 586.66, and we say from Monday, not too many, so we could if we come on, if we buy for Monday weekly stop Monday, October 21, the 585 call, and sell the 586, then we can see the trade cost is $36, and we would need to go at least to 585.37. 585.37 would be here. So if this is indeed the play, then we should see that on Monday, and would then have a fixed payout of $63. So yeah, like a little bit, so like an almost 1-to-2 ratio. Yeah, so wondering if it's worth it. Yeah, probably not. So like risk reward ratio we'd like to have better plays here with a much better payout. Theoretically, we could make the same trade today, but it would be more it would cost the same, but the payout would be bigger. The question, however, is will we get to see this happening today, or will it not be enough time? So we're probably not going to make the trade. I think the safer option would be the Monday option, so Monday expiration for, again, selling the 586 and buying the 585 call, to basically say, okay, we are going to get our fifth wave up here. And other than that, once we have that fifth wave, we should go a little bit down. And then on the overall bigger picture, we're still waiting for actually this one. Question is when. So if we go with the 590.76, and then we started here, which is October 3rd, and this is October 7th, which, let's say it's a week, and it's October 7th till October 15th. So it's another, 2 weeks if we're talking trading days, 8 days basically. And then this here is, pretty much only a couple days. And so if we were to say same length, so we'd be talking about here-ish somewhere, October 23rd. $589, $591, yeah. And we might make one of those. So if we go for October 23rd, get rid of this, and then the longer we go, the less the profit. Yeah, so actually, we can go then for the 25th, which is a Friday, which it's also only a 1-to-2 ratio, so we're not going to do it. Yeah. So we could theoretically set, like, then for the 25th, we could buy the 589 call and sell the 591, which would have which would cost around $50 in premium, and if we're right, would pay out 127. Yeah. So which means we only have to be right every, I don't know, like not every second time, every third time. So so every third time with a trade like this, we only would have to be right every third time for it to be profitable. But the question is, would that be profitable every third time? So I rather wait for setups so we get a better risk reward ratio. So while obviously then it's less likely to happen, but it also means we don't have to be right that often, or at least where the option market thinks is less likely to happen. Yeah. Because the other option is that we still get another push down here, of course, and that would not be that great then for that play. Now, that's pretty much it. Yeah, the Intel play that we made, we will see how that turns out. As I said, I will set myself a reminder to close that then later today. The one thing we still have to do is today's GameStop options. We already bought them back for, I forgot to adjust the price, so we overpaid for $1 per option today. Yeah, forgot to adjust it yesterday. Stupid me, but yeah, there we go. So GameStop for next Friday. Yeah, there we go. We can sell $5, not 25, $5, $30. Doesn't bring a lot, we can see. So it brings us $50 in premium. 5 pieces. There we go. Transmit.
Partially filled.
And so for next Friday, we sold another 5 $30 calls to generate a little bit, not a lot, as we can see in option premiums. I wonder, longer dated just doesn't make sense. I could theoretically go till January and we would get a little bit more money, but we only get it once. So if we get $50 per week, it obviously, we can, assuming everything else stays the same or similar, we can in 4 weeks receive the same than what we would get here in 3 months. So yeah, like there are ups and downsides for both trades. So I'd rather keep selling the weekly or writing the weekly calls here. But yeah, outside of that, we're gonna have to wait and see how the rest of the day develops. It's been not the most successful trading week. We're pretty much moving sideways already for some time. Yeah, we could have realized, I don't know, like 1, 2, 3% return this week if I would have thought to set some orders to take profit on some of our options. So in SPY, where, yeah, like we did not. What did we not expect in SPY? Oh, SPY we got in here, yeah. So we basically this here is what kind of like went, yeah, like we got in here, it went well, and then it didn't go well. So so the SPY options probably are gonna die. But there's no point in same situation like yesterday. Closing them at minus $30 doesn't make any sense when the overall risk is 45. So, and there's still the Hail Mary chance that it goes down further and we actually end up with a profit. The Intel trade, we're just gonna let it play out. So the overall risk now is basically $50, also not the world. And we already paid the premium, so it's like not that we lose money. I mean, we lose money, but it's not that we have to pay that money. Then we already paid for those options. So, and if they're out of the money, they're anyway worthless. So yeah, and yeah, that's pretty much it for today, actually. So since there are no questions in the chat and no requests to look into specific things, I'm actually gonna call it a day. Thank you all for. Well, let's switch back here. Thank you all for stopping by. I hope you were able to at least take something away from today's stream. And I wish you all a pleasant weekend. Don't forget, at least hit the thumbs up button. It helps me a lot. And if you want to do so, like, subscribe, enable notifications, and then see you all for another episode of Daily Market Mastery next week. Again, on Monday, roughly 5 minutes before market open. And then, yeah, hopefully, I mean, this week was also not bad. Every week where we don't actively lose a lot of money is actually not bad. So maybe next week we actually get it fully right instead of just partially right, or at least have stop losses in place that secure profits and don't have good trades turn bad. Yeah, so thanks for stopping by. Have a great rest of the day and a great weekend, and then see you all on Monday. Till then, bye-bye.